Leadership is really about preparing for the unexpected. We're not protecting income out of fear. We're doing it because people are counting on us at the end of the day, right? They're counting on you to stay strong. That's leadership. And if you consider yourself a leader, you need to be asking, what am I doing to protect the other folks that count on me?
Most financial plans are designed to work until you stop working. Whether you're a pilot, a surgeon, a contractor, or an entrepreneur, your income is the engine that powers your entire financial life. But few people realize how fragile that engine really is until it's too late. Your investments may look solid, but they rely on your ability to keep earning, contributing, and managing risk in real time. This episode isn't about fear, it's about reclaiming control. It's about building a system that keeps producing even when you can't. IBC isn't life insurance, it's leadership insurance, it's builder insurance. And builders don't just plan for the good years, they prepare for everything. So, Jeremy, brother, I'm always grateful to be here with you. So, why don't we tell our builders, our community, what they're going to learn in this episode?
Yeah, so on this episode, we're going to cover a couple of really key things, right? Number one, your income, surprisingly, not your investments, is your most vulnerable asset. We're going to discuss how the infinite banking concept is a financial backup strategy when life doesn't go as planned. We're going to talk about something called guaranteed insurability riders and how I like to use them for, like you mentioned before, pilots, surgeons, contractors, people who have licenses that they depend on in order to earn their income and how that extra layer of protection really helps them. We're going to discuss how IBC creates uninterrupted tax advantage access to your capital. And guess what? It's going to be on your terms. So those are a couple of things that we're going to get into today. And I'm really excited about this episode. I know that this one fits right in line with what you talk about all the time with founding fathers. So why don't you take lead on this one, Jason?
No, it's incredible. A lot of times, and with founding fathers, right? What's the mission, Jeremy? It's inspiring, it's educating, and developing fathers and their families to avoid financial slavery, right? To live their legacy, make a positive impact in the community. And we say that all the time, but we're talking about kids, families, and communities. And so the way we both, our mission together, right, with WealthWise is really about empowering people to reclaim control, to make sure that they are the ones that have control, have guarantees. And when we're putting this together, it really struck me about how much and how hard we work as Americans. I've been looking through some different charts and things, and the 50th percentile in America makes about $40,000. Well, that $40,000 is in the world standards is what the 1% earn globally. And so we have so much ability to earn money, to make money. And we always talk about, Nelson talks about it in becoming your own banker. What's the first job, Jeremy? What's the first job?
To protect your income?
No, it's to make money. The first business we all have to be in is to make
The
money.
business that you're in and the banking business.
That's it. To two businesses we all need to be in. We always try to keep it as simple as possible. So when we were putting this episode together, I thought, wow, this is powerful because this is explaining to people what whole life insurance is and why it's been in place and why one of our future episodes is going to jump into this, but why the founding fathers saw this as a way to protect our society, to protect the United States, why we saw protecting our communities. And it's because the breadwinner, right? And back way back when, that was typically the male. Now, it can be both mom and dad and everybody else going out to work, but it is our ability to go out and earn an income, whether we're a pilot, a surgeon, we're a computer programmer, an engineer, whatever we're doing to add value to someone else, it gives us the ability to earn money. Well, whole life insurance was built as an income replacement should something happen to that breadwinner. So, Jeremy, when we look at it, like you and I are in different generations. Half the jokes I know, you know some of them, but you don't know all of them because I'm way older than you. Not way older, but by a decade plus older than you. And so, like, I like to joke around, say I'm in halftime, like 51 to 60s halftime when it comes to whole life.
Yeah, and I'm over here just warming up.
You're
Ah,
just warming up. Like you just got in the game not that long ago. You're still in the first quarter. Like, think about that. I'm at halftime, you're in the first quarter. Now, if you're in your, say, 41 to 50, you're in the second quarter. 61 to 69 or 70, you're in the third quarter. And then 70 to 75, you're in the fourth quarter. Anything over that, you're in overtime. But when it comes to whole life insurance, the first principle, and I know I'm going really long on this, but is if I'm working and not say Jeremy and I make the same amount of money, if we both take out equal policies, I will have less whole life insurance on my body because Jeremy's only in the first quarter. I'm at halftime. So it's replacing the ability that I will earn money over the rest of my working life.
if you look at the income tables that a lot of these insurance carriers give, as an example, age 40. Well, if you take your income at age 40 and you multiply it by 25, why 25? Well, they look at your earning years up to age 65, right? 65 minus 40 is 25 years remaining. So if you're going to figure out, just as a really quick rule of thumb, take the age
Mm.
of 65, subtract it by the age that you are, and multiply it by that difference. And that's typically the death benefit that you come out to, right? That's what the underwriter is looking at. There are, it's I think it's like actually age 35 to 40, 40 to 45 is kind of that window. But that's how those death benefit insurability tables work. So simple. If you look at it from an income replacement, the what we do, engineering it for the living benefits, that comes into our specialties, and we'll get in a little bit more on that later in the episode.
And thank you, Jeremy, for this simple example. And it's just, it again, it's how much longer are you going to be working because you are your most valuable asset, right? We talked about the first business, the business of making money. Well, if you're your most valuable asset, and if you're a builder, what are you doing all the time? You're going out and building, you're doing the things, you're taking action, you're building relationships, you're going to work. What happens when that shuts off? What
Yeah,
happens when you're not able to? What happens when, you get injured? What happens when you get sick because you've been going and going and going and going? You're always thinking about what is the next thing as a builder? What is the next thing that's going to move this mission forward, to move my family forward, to produce more income, to help more people, to add more value? But how often are we slowing down to say, wait a minute, practically speaking, am I protected? Is the system protected? And Jeremy, let's jump into a little bit why this is a system rather than just hoping and praying that things are going to work out.
yeah. The system that we're talking about is being proactive. That's really what you're getting down to. It. The root of it is being proactive as a builder, right? There's a kind of an unspoken fear, especially amongst a lot of high achievers out there, that as long as I keep showing up, we're going to be fine. But
Yes.
let me ask you, does life go according to plan? What happens when life happens? And then that's when that trauma loop kind of kicks in. It's like, oh, I should have prepared when I had the chance. But as you go through these quarters of life that Jason's talking about, and you get closer to the end of that game, your ability to prepare is being dramatically reduced. And when we talk about those income tables, those ratios are also changing. When you think about the legacy that you're going to be leaving behind, because guess what? At some point, we are going to end up leaving behind a legacy. Is that legacy? How are you going to define it? We're not just talking about income. We're talking about the ability to end up helping the people that come after you, especially if you are the sole provider. If you're the builder in your family, what are you doing to protect your family? What are you doing to protect the things that matter most to you? Perhaps it's your church. How are you protecting your congregation? What are you doing next to prepare?
And Jeremy, that's when you're talking about that, something you said, just so people didn't miss it, you talked about a trauma loop and coming up. And basically, what I believe you're talking about, and you can clarify if you need to, is that you're sliding into scarcity. You're sliding into reactive thinking. You're sliding into the gap. Like you can look at this so many different ways, right? You have scarcity, abundance, you have gap, you have gain, right? You have fear, you have faith. So whatever that looks like to you, but when you hit that trauma loop of, oh my gosh, what happens when I should have done this? And like Tony Robbins said, if you keep should have all over yourself, right? If you keep, I should have done this, I should have done that, I should have done this. Well, a little thinking, long-term thinking, long-range thinking, which is the first principle that Nelson Nash teaches us in becoming your own banker, and we teach here all the time, is really protecting the system, protecting the asset, protecting the legacy. And yesterday I had the privilege of going to Kennedy Space Center with my youngest son and his classmates. And Jeremy, you and I talked about this on my way there. I was blown away, man. Like, it's been a few years since I've been there, but just the ingenuity of man and of woman and of what we're able to think and create by dreaming, by believing, by playing. Like Einstein's great quote that the highest level of learning is play. And so as I was there, I was astonished at what we can accomplish. And we can accomplish it by seeing what that future is. So when we're talking about legacy, when we're talking about, it's not what we're leaving, it's what we're showing our kids, our families, our communities, how we have interrupted that pattern of generational scarcity and really build something that's meaningful for the future.
Yeah. I now want to make something very clear here, right? Leadership is really about preparing for the unexpected. We're not protecting income out of fear. We're doing it because people are counting on us at the end of the day, right? They're counting on you to stay strong. That's leadership. And if you consider yourself a leader, you need to be asking, what am I doing to protect the other folks that count on me?
And the cool thing about this leadership is this isn't something that you have to invent on your own, Jeremy. This is something that's been around for hundreds of years. I talked about the founding fathers, the original ones, not these guys here behind me, the ones that are going to reshape America, make money great again, maybe. I don't know, but it is reshaping America from the grassroots movement, from the you and me level up. And going back hundreds and hundreds of years ago, society, I don't think, moved at the pace it's moving now. We didn't all want everything instantly. We didn't want all of the problems be solved. But by, like you just said, with leadership, in my definition, is going out first, figuring out what to do, and then turning around and giving a hand to say, hey, man, hey, lady, I got you. Come with me. I'll show you the way. And so what we're showing is something, and what we're talking about, like usual, is a way to build that guaranteed foundation to really stay in control and just be ready for when change comes. There's one guarantee in life. We're guaranteed to have change happen in our life. Conversations today, talking to a couple, been very good financially, putting money away, gave all of their this is not this topic, but put all the qualified money into an equity company from their self-directed $1 million+ all of it, poof, gone. Sorry, we mismanaged it. We talked about exactly what you and I are talking about today. They have 3 sons that are helping them in a business after they retired, because guess what? They had to come back and go back to work, create money. And now with the next thing, and they got more money, other people's money through a HELOC. And they took that and they put it into something else that was another volatile situation. And so
Yeah.
my whole conversation around them, and what you're going to lead into and lead us to, is they're doing all of these or decisions versus building the guaranteed foundation they control, the guaranteed opportunity fund that they can build up over time. Because we talked about, what if that money, the $1 million+, was in your system? And now you're taking and putting that money to work. Even if you lost a portion or all of that money, your 3 boys are still guaranteed to be taken care of later.
Yeah. And let's get something clear here too, right? Your income is the engine, right? You are the guarantee right here.
Yes.
Infinite banking, that's the chassis that we use, specifically the product. When I was an average commander and I was running special operations missions, Jason, you'd be surprised to see how many contingencies we would run, right? It would be 2, 3, 4, 5 levels deep sometimes, just trying to prepare. It was always preparing for the worst, right? Is what they would tell you that you're doing. But again, it wasn't fear based. What we're trying to do is actually plan for success. We're planning for success. But you have to ask yourself, what if? And when life doesn't go according to plan, the question is, what if? And so
Yeah.
if you are that person that's going to be showing up day in, day out, whether it's a pilot, a doctor, an attorney, and other folks are relying on you. As a small business owner, guess what? A lot of small business owners don't just work on the business, they also work in the business. And unfortunately, if you were to be removed from that business, what happens to your employees, the people who are relying on you day in and day out? because the IBC, the way that we talked about it in other episodes, it's not just an income replacement. That cash value can be served as an emergency fund as well for you, for your family, for your business partner. There's so many different, various aspects of what it is that this does in terms of the layers of protection that are naturally built into it. And that's why I like the product that we use to implement the process of banking.
And Jeremy, I thought yesterday we saw all the contingencies with all the different space missions, right? That is notebooks upon notebooks upon notebooks, like you said, planning if something did fail, right? Because what is it saying in the military? If you fail to plan,
You're planning to fail.
that I thought about you yesterday too. I was like, wow, being in the military, having the responsibility you had, it's the same thing with our life for our family. We understand, again, we've got the first job down. How do we go make money? Are you building that foundation where it gives you the guarantees, the control, the rainy day fund, the change fund, the what if fund, whatever it is? It's an overlooked risk that people aren't taking into consideration right now. They're thinking, another conversation today, talking to a couple who's built up millions and millions of dollars. They earn top, 5% of the United States, and they both have term insurance and it's going to run out when they're 60. They're like my age, right? They're in their early 50s. So they're at halftime and now they're starting to think about the legacy, about their twin daughters, about what's next for their family, how they create passive income. Again, as Americans, we're really good at showing up first, leaving last, working hard, being humble, going out and creating, adding value. We're not as good about taking care of ourselves and paying ourselves first.
Yeah, and think about what you can do as a builder, like that family specifically, when they have that layer of protection that is guaranteed. Right now, the term that you're talking about, that's not guaranteed. In fact, 98% of the time, it doesn't go through. And by the time you want to renew it, either your health changes or you might find that it's just way too expensive to renew it. So what do? You get rid of that layer of protection. But the way that we build it off of using whole life insurance, specially engineered for the living benefits of banking, that is a layer of protection that allows them to go out and continue building, to continue growing for their family. And there's so many other benefits that come along with that level of protection because you're no longer worried, consciously or even subconsciously of the what ifs. That answer's taken care of, right? You've already solved it. Check mark. Move on. Let's continue growing. Let's continue building. So when we talk about, here's an example. I'm an airline pilot. Every single year, I put my license on the line. And how's that work? Well, outside of my annual flight exams, I actually have to take a medical exam. And in a sedentary environment, you'll be surprised, go figure, that a lot of pilots, as they age and they're sitting in that seat for thousands of hours, having radiation cook on them, we have high levels of skin cancer. The sedentary lifestyle, we have pulmonary embolisms. We have heart issues. That's a leading one. If you're over the age of 40 and or you're a captain, you're usually doing 2 of these medicals a year.
Mm.
So what happens if you can't get your medical review renewed that year? Well, that's why I like the system that we use because there's something called a guaranteed insurability rider, or at least that's what it's called with one of my favorite insurance carriers, right? So what does a guaranteed insurability rider do? It guarantees that the insurance company will end up covering the cost of your premiums. And because we've engineered it with whole life, that allows your cash value to continue to grow. All the dividends we have reinvested back into the cash value. And guess what? That means your death benefit continues to grow. So even if you are removed from the ability to make income, because of that rider that is attached to your policy is still in force and it can still continue to grow despite you not having the ability to pay the premiums anymore. Those premium deposits are now in the onus of the insurance company. And that is such a powerful thing. It's a level of protection that I love giving to people who have licenses, who have responsibilities to people other than themselves, because the cost of these riders, there is a cost to it, but it's so minute and so minuscule that most people are willing to pay it. When I say minuscule, we're talking like sometimes 10, 15, $20 a month, okay? You can come up with 10, 15, 20 bucks a month. Again, it is also based on your age and ratings, and this is why it is stay, healthy and get this done earlier in life, because once it's set it's not changing, right? The earlier you start and you get that rider attached, that thing's not changing anymore. So that guaranteed insurability rider really is another additional layer of protection that you as a builder can give to people who depend on you.
That's a great point, Jeremy. It's called a waiver of premiums in other companies, right? So there's other riders, different companies, different mutually owned dividend paying companies have different names for it, but it's really about the layering in the contingencies for the change that is guaranteed to happen. I mean, we talked about this in another episode, but it's not much different. Like, say you weren't ready to start the infinite banking concept. You and I had a whole episode about this, but you have a convertible term as an option where now you're locking in your insurability. In that way, if you know you're a builder and you're building your company, you just don't have the liquidity to pay yourself as much as you want to first. You're at least locking in your insurability so you can go and convert it at a later point. It's really thinking ahead. We're talking about thinking ahead, planning ahead, being a builder, a leader by building in the contingencies and the what ifs on the front end.
And coming back into the level of control, right? What is one way that a lot of folks planning for retirement think that they have control, Jason? It's those retirement accounts, isn't it? But
Yes.
are those retirement accounts actually yours? And we've talked about that before, over and over again. When you have penalties and fees for early access, when you have limitations to what you can capitalize into your system, when Uncle Sam is going to take his cut when it comes down for your withdrawals, when it's tied to a market, how much control do you actually have? Do you have control of those investments, or do you just have accounts? Let's get something straight. I do have qualified accounts. I do. I end up investing through them. I don't take all of my capital that went through them. I'm not funding them anymore, but I still loan money through real estate. I still have them. We have, other structures out there called rollover business startups are fantastic. There are reasons and places for HSA accounts, Coverdales. There are certain things you can use for these qualified accounts. Is it the first place I put my capital? No, it's not the first place I put my capital, but it is where you can in the IBC space, control 100% of your capital with no one coming between you and that account.
And there's so many historical reasons why that is. And Jeremy, I can't believe you didn't let me tell my story about Uncle Sam and your silent partner and how he lets you give him all the money, you put in all the capital to grow this little tiny seed into a great big harvest. And then you have all these contingencies. You have all these things, all these rules and regulations on when you can touch the money, what the penalty is, what the taxes are going to be, and you're deferring them, right? When you defer your taxes because you're thinking about this year's tax returns, what you're really doing is postponing them for an unknown amount in the future. Just kind of hammering some of the points we talk about all the time. And I mean, Nelson says it on page 85 in the book where he talks about, listen, if the IRS and the government really cared about the amount of taxes you're paying. Anybody here feel like they're not paying enough taxes? Let Jeremy and I know. We'd love to have that conversation with you. But if you feel like taxes are something you're not paying enough of, on page 85 in the book, it talks about how, well, if Uncle Sam really cared about how much you were paying in taxes and all the different accounts that are created, whether it was the pension plans first and now the qualified plans and the HSAs and on and on and on, every time there's a problem, the government's come up with a new solution. If they really cared, they would just lower taxes or do away with taxes altogether. That does not seem to be happening. So I would say if you want something that's been around longer than the tax system, something that you would actually control, something that is state regulated versus federally regulated, this is what we're talking about. It's building that foundation over time so you have control, because that's what a leader is. A leader is someone who builds control, builds plans and systems that is going to guarantee that legacy.
Yeah, it's really about protecting momentum, isn't it, Jason? That the momentum that you're building over time, right? It's not just planning for today, it's planning for tomorrow, and that momentum continues to build. And as we know, just like in the IBC space, that cash value also continues to build momentum. And as a leader, you're not just leading, but you're providing. And that liquidity and that control that you're talking about, that control that's providing momentum, that allows you to pivot when guess what? Life happens. Because as you said earlier, and I can learn, well, what's inevitable? Change. Change
Change.
will happen, right?
It's going to change. Some people call it an event. Some people call it change. but it is coming. We all know it does. And even comes in our overall system, like every 7 and 9 years, there's some big financial change or some big economic change. We've seen it our whole lifetime. When will we notice that this is actually true and it's simple? And like Jeremy said, like when you started doing whatever you were doing to earn money, right? The first business, how good at it were you when you started? I'm guessing you had a little bit of acumen, but you probably weren't really good. Like you wouldn't want Jeremy the first time you ever thought about flying a plane, getting in there and getting passengers getting on and then Jeremy taking off. We would all not want that to happen as much as I trust him.
No, man, I'm like Chuck Yeager. I got you.
Yeah, I don't want that to be the case. But Jeremy mentioned momentum, and that's what made me think of this, is it took you a while to build momentum with your business, with your abilities, with your skills, with your habits, with everything. Why not start building those habits and building that system today? It doesn't even mean that you're starting your specially engineered for you whole life foundation for all the things that we're talking about. It might be as easy as just automating paying yourself first and moving that money to a segregated account because we're abysmal as Americans at saving, Jeremy. I'm sorry, last month, 3.9%. But since 1910, the 1% have been saving an average of 38%.
Mhm.
So if you want to know what the difference is between the wealthiest families and the folks that are living paycheck to paycheck, it is their long range thinking. It is their ability to change that thing, one thing, and pay themselves first.
Well, and let's get something clear too. And I know this is going to irritate and aggravate a lot of listeners, but if you are living paycheck to paycheck, it's because you made the decision to live paycheck to paycheck. Your habits are probably where you need to start. What are you doing that's put you in a system to where you are living paycheck to paycheck? I didn't grow up with money. All right. My family did not have good savings habits at all. They didn't pay themselves first at all. They decided to pay to everyone else first. And at the end of the day, with 5 kids to feed, and they're struggling trying to figure out where food was going to come from or how we're going to pay for school clothes for that year, what we're going to be doing. Well, why were you paying everyone else first? What happened to you prioritizing us, your family? Why are you not paying us first? So if you're living paycheck to paycheck, this is going to be a hard pill to swallow, but that's a decision. You chose to do that.
And and if you continue after this point, Jeremy, let's get everyone tuning out. If you continue to do so after this point, you're continuing that choice. You're continuing that choice. Stop being last in line for your money. Listen to that again. Stop being last in line for your money. All of us go to work as fathers, mothers. We're going to work because we say we're building something for our family. And a lot of time we're building for us too. And when you have the opportunity on the way to Kennedy Space Center, Jeremy, I had an awesome conversation. I was super pumped about it. I asked Connor about it. He was not nearly as pumped. Jeremy, did we talk on the way home?
You and I mean, no, we didn't.
No, no, I was bummed too. But you know what we did? Connor and I listened to an awesome book together. We paused it. We talked about it. We had conversation about the day, what his highlights were, how you can't run, jump, or play in the playground there. But, just the point being is you have to prioritize what's important to you. And if it's really your family, if it's really building legacy, pay yourself first. Keep it simple.
Legacy is not a one-time transaction. Okay. It's a structure. Legacy is a system. And it's a message to you, to your family, that if something happens, guess what? We're prepared. We're going to be okay. All right. All the living benefits, all the other previous episodes, those things are great. Okay. But at the core product of what it is that we do, we're talking about these layers of protection. And who in line, when it comes down to these death benefits, who's first in line, right? Always 100% is your beneficiary. There's no one coming between you and that money or them and that money. It's not Uncle Sam. It's tax free. There's no judge, meaning there's no probate court. These are levels of protection to make sure you're showing people, I showed up, I cared, and I'm going to take care of you. And when you have that level of safety and security that you built into your family plan, the ability to grow and build, if you think I think back to Maslow's hierarchy of needs, okay? Cover your bases, get your foundation secure so that way you can climb the pyramid to self-actualization.
And that's an awesome awesome thought to almost close this episode down is you're really making the choice. And you mentioned something, it's how people feel. Like so many people I talk to, they're worried that they don't have a plan in place, a succession plan, if you will. They don't have their family protected. They don't have their business protected. A lot of them are just continuing to go out and just work themselves, work themselves, work themselves, whether they're doctors, whether they're engineers, whether they're pilots. We keep showing up and working harder and working longer and working more without planning for that protection. And what does it lead to? It leads to stress, to worry, to burnout, to sickness. And it's really simple. Even if you start small, start something that's manageable, something that's meaningful, and you start building today, that internal feeling is going to shift. And the shift is really how you're going to go from being scared or in a scarce fight or flight mode to being abundant. And like Jeremy said, it's not going to happen overnight. Change, legacy doesn't happen overnight. It's the small, consistent, persistent habits that you're going to do by paying yourself first and building a system, an opportunity fund, a fund for change, a fund for whatever might be coming in the future.
This is not about preparing for the worst, okay? It's about really making sure that your vision and your values are protected and that you're providing for other people, right? No matter what happens. Because again, your life, your health, your license, none of that's guaranteed. It just isn't. Because as Jason mentioned earlier, change is inevitable.
Change is inevitable. You're not guaranteed. You might say, "Hey, I've been at this job for 10 years." If you're in Florida, right to hire, right to fire state. It could be over tomorrow without a reason, without a need. So not scaring anybody, but just start thinking, if you have the ability and you're blessed to earn now, how are you creating a system? How are you utilizing systems that are there for you, that are going to give you the most benefits? They're going to take you away from Uncle Sam, take you away from government sponsored plans that are keeping you shackled. Like start building something that's going to be that you're reclaiming that control, that you're the one, the producer that is creating, you're the leader that's turning around and leading not only your family, but the community of people around you.
Yeah. And I would encourage you to also go out and listen to the story, the interview we had with Jared Adams, who
Mm.
talks about this very thing, who was a professional pilot, had a health scare, and now he's grounded and he's not able to fly anymore. So if you or someone you know is just one health exam away or one mishap away from a financial pause, share this episode with them. Go and listen to Jared's story, okay? Because what we're talking about, again, is providing levels of safety and security and building the foundation you need in order to be the builder who you want to become.
That's it, Jeremy. So for everybody listening, go listen to that episode, check it out. And Jeremy, as always, you're already in banking.
Just not the banker yet.
All right, be blessed all. Thank you for your time and your energy. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.